Hey everyone, welcome back to Corporate Decoder, the place where we dig into the nitty-gritty of corporate filings to find the stories you need to know. And boy, do we have a story today, a peek into the financial world of a company that might just be revving up its engines, or perhaps sputtering a bit. Buckle up for our deep dive into Chijet Motor Company in C's latest report. You ever wonder what is really going on under the hood of a growing company, especially one in the fast-paced automotive sector? Well, today we are pulling back the curtain on Chijet Motor Company Inc. as they file their latest report to the US Securities and Exchange Commission. We're going to break down what these numbers really mean for the company, its future, and where it might be heading. Before we dive in, if you love getting these kinds of straightforward insights from complex financial documents, make sure you hit that subscribe button and ring the notification bell so you never miss an update. Also, we have a fantastic Discord community where we talk all things corporate finance, linked right down in the description below, so come join the conversation. This report comes to us for the month of September in 2025, and it is what is called a Form 6 KA report that overseas companies like Chijet Motor Company Incorporated file to provide important updates. Think of it as a status update for investors, a way to keep everyone in the loop. Now, what is really interesting here is that this filing is T, just a brief note. It includes some pretty important financial statements. This is where the rubber meets the road, folks. We are getting a look at their condensed, interim, unaudited, consolidated financial statements. That means we are getting a snapshot of their financial health as of the 30th of June 2025, looking back at the 6 months that ended on that date and comparing it to the same 6 months in the previous year, 2024. Unaudited means they haven't had a full external audit yet, but it still gives us a very good look at how things are going. And that is not all, they've also included their operating and financial review and prospects. This is the management's own explanation of what is behind the numbers and what they see for the future. It is their narrative, their forecast, and it is crucial for understanding their strategy and outlook. Now let's talk numbers, because that is what everyone's here for. While the full details of the financial tables are extensive, we need to focus on what truly matters for understanding the company's performance and direction. Companies are always reporting revenue, but it is what is happening below the top line that tells the real story. We want to see if they are making money and how efficiently they are operating. Looking at their accounts receivable net, for example, this is the money that customers owe them. If this number is growing significantly, it could mean they are selling more, but it also means they need to be good at collecting that money. A huge jump here without a corresponding jump in sales or profits might raise a flag about their collection process or the creditworthiness of their customers. We want to ensure that these receivables are not just promises, but actual cash in the bank down the line. Then we have accrued expenses and other. These are costs that the company has incurred but has not yet paid. An increase here could signal necessary investments in their operations, or perhaps a build-up of short-term liabilities. It is important to see if these expenses are aligned with their growth strategy, or if they represent potential financial strain. Are they spending money to make money, or are they just accumulating bills? And of course, the lifeblood of any company, cash. Looking at their cash and cash equivalents as of the 30th of June 2025 will tell us how much liquidity they have on hand. This is crucial for meeting short-term obligations, funding operations, and investing in new opportunities. A strong cash position typically means a company is stable and can weather economic storms or seize opportunities when they arise. A dwindling cash pile, however, can be a serious concern linked potential trouble ahead. What we are trying to do here is to see the story the numbers are telling. Are they growing sales profitably? Are they managing their costs effectively? Do they have enough cash to keep the lights on and invest in their future? In the automotive sector specifically, we be looking for signs of expansion in manufacturing sales, and perhaps new model development, all of which require significant capital and a clear path to profitability. We also want to see if their revenue is growing faster than their expenses, a key indicator of healthy business growth. For Chijet Motor Company Incorporated, we need to see if their financial performance aligns with the ambitious goals often associated with companies in the electric vehicle or new energy vehicle space, which is likely where they operate. Are they gaining market share? Are they innovating rapidly? And are they able to translate that into solid financial results? Now let S transition to what the management themselves are saying about their performance and their outlook. This section often provides context for the financial numbers and helps paint a picture of the company's strategic direction. When they discuss events as of and for the 6 months ended the 30th of June 2025, they are likely highlighting key achievements or challenges during that period. This could include successful product launches, expansion into new markets, or perhaps overcoming some unforeseen hurdles. Understanding these events is vital to interpreting whether the financial results are a cause for celebration or concern. We are looking for clear evidence of progress and a well-defined strategy for future growth. The operating and financial review and prospects section is usually where management attempts to put a positive spin on things. However, as astute investors, we need to read between the lines. Are they acknowledging risks or are they glossing over them? Are their projections realistic or overly optimistic? We want to see a company that is transparent about its challenges and has a robust plan to address them. For a company potentially in the automotive or electric vehicle industry, we would expect to hear about their competitive landscape, the impact of new technologies, and their approach to environmental regulations. These are all critical factors that will shape their future success. Looking at Chijet Motor Company Incorporated specifically as a foreign private issuer from the People's Republic of China and their listing on the US stock exchange, they are navigating a complex global marketplace. This means we need to consider geopolitical factors, supply chain issues, and shifts in consumer demand that are not unique to their home country. Their stated prospects will need to be evaluated against these broader economic and political landscapes. The commitment to filing under Form 20F indicates they are adhering to US generally accepted accounting principles, which is good for comparability, but the underlying business operations are deeply rooted in China. So what is my take on this filing from Chijet Motor Company Incorporated? Based on the information provided in this report, which includes their interim financial statements and management, as outlook, the company appears to be in a phase of active development and investment. The inclusion of detailed financial statements and a forward-looking review suggests a commitment to transparency with investors. However, the specific financial numbers for revenue, profitability, and cash flow from the provided snippets like accounts receivable net and accrued expenses and other will ultimately determine the narrative. If these numbers show strong and profitable revenue growth, efficient cost management, and a healthy cash position, Chijet Motor Company Incorporated is likely on a promising path in the competitive automotive market. Conversely, if there are signs of slowing growth, increasing costs, or a shrinking cash reserve, it would indicate potential headwinds and require closer scrutiny of their long-term strategy and market position. A notable risk for any company in this sector is intense competition and rapid technological change, especially in the electric vehicle space. Companies that fail to innovate or adapt quickly can quickly fall behind. An opportunity for Chijet Motor Company Incorporated could lie in leveraging its position within the rapidly expanding Chinese market and potentially capitalizing on global demand for new energy vehicles if they can scale efficiently and cost effectively. In conclusion, this filing provides a window into Chijet Motor Company Incorporated's current financial standing and management's perception of its future. Investors should pay close attention to the trends in their key financial metrics, especially revenue growth, profitability, and cash flow generation. The company's ability to execute its strategy in a dynamic market will be the ultimate determinant of its success. Alright, that is our breakdown of this Chijet Motor Company Incorporated report. What are your thoughts on these insights and what do they signal for the company's future? Drop your opinions in the comments below. If you found this analysis valuable, please hit that like button, it really helps us out, and subscribe for more deep dives into the world of corporate finance. And don't forget to join our Discord community linked in the description for more in-depth discussions. Thanks for watching and we will see you in the next one.